Hello again, today is Friday, October 21st, 2017, and this is a stock market update. So once again we have fresh all-time highs on many major averages, many sectors, many industrial groups, some foreign stock ETFs, many of them move to fresh highs. Of course, some pockets of weakness remain. You could short it, but I would be careful because we're clearly in a bull market for stock market right now. Look at bonds in more detail, see if there is a trend change. We'll look at euro as it ran into a 50-day moving average as resistance. Gold is being pressured by a stronger dollar. Oil is still kind of difficult for me to see which way it's gonna go. We'll look at some really interesting candlesticks on natural gas, and actually we will look at copper as well. So I added it in. Okay, let's look at S&P 500 ETF SPY. This is S&P 500 ETF SPY. Well, this is all-time highs, pretty self-explanatory chart. Here back a couple of weeks ago, I thought there was going to be a buying climax. I clearly was wrong. And actually, I sent in my subscribers a little, like a letter about it, in the sense of, I try not to get very attached to any kind of one idea. Right now the stock market is clearly bullish, so I don't want to short it. Sometime in the future, I'm sure the stock market will change, and maybe we'll look for shorting opportunities. But if I was to get attached to this idea that this was indeed the buying climax, and let's say I was going to short it there, yeah, if I was to short it here, I would probably be squeezed out by now. By this fresh all-time high. So right now I am seeing no major issues with this chart, and I can see advanced decline lines confirming the all-time highs for the index itself. Here is S&P 500 with a popular indicator on it. This is a daily chart of S&P 500 in here. I showed this chart in the past, and I showed that it is difficult, if not impossible, to trade on divergences. Here is a divergence. Bullish, or maybe you can say this is a bearish divergence, because you can see the percentage of stocks in bullish percent index was dropping while the index was going higher. And then the index went even higher. So really very difficult to trade on those divergences. Additionally, here is another reason why I'm basically no longer using momentum indicators in pretty much in any way, shape, or form. RSI is a momentum indicator. You can say that there's overbought territory is above 70, which is commonly accepted. So here's an overbought territory back in February of this year. Yeah, the index pulled back a little bit, but then made fresh all-time highs. So it pretty much means nothing, really. And here's another overbought territory, which is currently from October 1st, basically. S&P is in overbought territory, and notice what's happening. It's becoming more overbought. So probably the best thing to do is just avoid indicators altogether and concentrate on the price action. Candlesticks are very important. You should learn to read candlesticks as a new trader. S&P 500 on a weekly time frame, very bullish chart once again, multiple triangle consolidations here if you are a classic chartist, for example, and with fresh breakouts to all-time highs, which are still going on, still continue. QQQ was underperforming slightly once again, but now broke out to fresh all-time highs. Don't see too many issues with this chart, I think. We could just continue higher, maybe pull back a little bit, but I don't see any trend reversal yet. Trend reversal here on the weekly chart is pretty much absent, and we're continuing higher still. Eventually there will be a trend reversal, but it will pretty obvious. IWM here, very kind of telling chart. This is possibly a fallen flag here. So we have a big move, fallen flag. Maybe this is already a breakout above the fallen flag. So maybe if this happens, we can see another big leg up for small caps. IWM on the daily time frame also just showing that overbought. Here is overbought back in December. Didn't really matter. Yeah, we became overbought. The indicator became less overbought. The index just traded sideways to slightly higher. If anything, oversold territory was a good sign, because this is where we'll see, oh, look, we're oversold. Maybe we should be buying at this point. New York Stock Exchange Composite. This is a very broad index, so we can see all-time highs as well here. Advanced decline line also is confirming the all-time highs. Dow Jones Industrial Average gap to fresh all-time highs. Maybe a little bit overbought. Maybe this is a buying climax. Who knows? Impossible to tell. I see very strong chart here with very strong internals. I can see advanced decline lines. In other words, participation is broad. Most of the stocks are moving to fresh highs and up. Financials. This is a sector fund breakout to fresh all-time highs. I mean, this could be a breakaway gap. It's possible to continue higher. I'll talk about bonds a little bit later in a little bit more detail, but financials are a little bit more dependent on interest rate, and this is one of the reasons why I'm a little bit more concerned about bonds than I was until recently. So we'll look at bonds soon. Industrials also fresh all-time highs, very strong chart. I wonder if transportation is helping. Yeah, transportation is doing quite well too. XLP, this is a semi-defensive sector, consumer staples, and you can see it's underperforming. Perhaps it's underperforming because the leadership right now is with the offensive sectors like XLY. Real estate investment trusts, IY, are also doing quite well. This chart, this is a 52-week highs here, so we're trading next to 52-week highs, and this is again a bullish chart. Diversified semiconductors, XSD, fresh all-time highs. So this is showing very good appetite for risk. In other words, investors are driving prices for riskier stocks within this ETF, and semiconductors are a little bit more risky than your average other stocks. Solar stocks also doing quite well. I have a relatively heavy position in 10, and I have a position in First Solar as well for my elite service. So yeah, I think solar could go potentially significantly higher. Foreign equities, also emerging markets, fresh all-time high. So the market, what I'm trying to kind of present here is that the market is bullish. Vast majority of stocks are moving towards new highs. There's no red flags that I'm aware of yet where stocks may correct imminently. I don't see that just yet. Maybe there is no divergence in the sense of breadth, and there is still a consistent push to fresh highs. Now, of course, there are some pockets of weakness, and here's one pocket of weakness. Uranium, relatively weak chart, sure. We could short it. Well, here is a uranium on a TradingView interface, and I have my proprietary indicators or overlays that I have applied to this chart, and you can see that they are easily you can use them as a resistance and support lines, basically. So we have a breakdown here in May of this year, and then we can short it anywhere along the light blue line or the yellow line. If you have a margin account. Another pocket of weakness, but also a potential opportunity is XRT, and I am currently undecided which way this will go, so I don't have any positions on this one, but I would be very interested if we get above 44.30 or so, and then we'll see how this fund behaves. So again, once again, I think the market is bullish, so any pullback, any sizable pullback should be viewed as a buying opportunity. All right, let's look at bonds in a little bit more detail this week. So here's TLT, and I think it's one of the most important charts if you trade bonds. TLT is probably the proxy. Maybe also you can look at the 10-year Treasury yield, Treasury bond fund. I prefer TLT, but it's your call. Basically, here what I see is 2017 highs on this chart. Now, this chart is adjusted for dividends. Here's what my concerns are. Here's this gap through the 50-day moving average, and a rebound towards it. We can look at TLT looking through the indicators. Problem is that this chart here is not adjusted for dividends, so it looks completely different from the one on StockCharts.com. So I actually prefer to look at this chart. It's more convenient for me to look at this chart. So we're just gonna go ahead and use this chart. So here what I see is I still see this gap, and I still see this resistance in the 50-day moving average. We could break below 123.03 and continue lower to, let's say, 118.60 or so. So I'm not 100% on TLT now. I was hoping that this candlestick from last week, you can see that it's a very bullish candlestick because it is hollow, large candlestick, and this is a weekly candlestick on that top of that. So I was hoping that that was it as far as the bottom in bonds, but this week there is significant selling. There's also rejection at around 126.10 or so. Let me see where the rejection, 126.09. So I am more concerned about this chart now. So if we break below 121.82, I think we could see some more selling. AGG, Aggregate Bond Fund, pretty similar picture, because this one kind of includes both LQD, which is a corporate bonds, and some of the treasuries, so it's somewhere in between the two. So as far as the actual chart itself, AGG made fresh all-time highs, so this one looks more bullish than TLT. So this one, I would still be I would still be buying this chart. I would not be shorting it. Here's what concerns me is that we can clearly see strong outperformance by stocks versus bonds. So it's basically a trade-off of where you want to be. You want to be in bonds or you want to be in stocks. In this case, clearly you want to be in stocks. Here's LQD, which is a investment-grade corporate bonds, also fresh all-time highs. So compared to TLT, this one looks a lot more bullish than TLT. But then again, TLT is more volatile than LQD. We have fresh all-time highs here, and now we have an inside week where this week's candlestick is entirely within previous week's candlestick. So this is a triangle consolidation. A breakout or breakdown out of the consolidation could mean a relatively strong move either way. These are all-time highs, so it's difficult to see a reversal still. I don't see enough evidence to say that it's indeed a reversal. And of course, junk bonds correlate strongly to the general stock market. You can see a correlation coefficient very highly positive. So it makes perfect sense for junk bonds to be hitting all-time highs yet again together with stocks. Here's the multi-decade bull market in U.S. Treasuries that started back in 1981, continues to this date. Now, you can argue that there is some appearance of a bottoming pattern in this 30-year Treasury yield. And remember, yields and bonds move opposite to one another. Now, it's possible that already we have broken out, and now yields will be moving higher. In other words, bonds will be under pressure. But I still think that we need to see a breakout in the yield around, well, let's zoom in and take a look, maybe somewhere around 3.25. I think if we, on weekly basis, or rather, I'm sorry, on monthly basis, a monthly chart, if we on monthly basis close above maybe 3.25 or so, or in this chart 32, I think then we could say that, yeah, the multi-decade bull market in bonds has indeed come to an end. But for now, we'll see. So there's that level again, somewhere around 3.25 or 32.5 or so. Okay, let's move on to the Forex universe. So first of all, on this chart, I think if you trade currencies, and I dabbled in it a little bit, I'm not a big fan of trading currencies, but like me personally, I found that support resistance lines are quite important. So you can actually get these indicators from me. Just request them. So here is a euro versus US dollar on a daily time frame, and you can see that we had a breakout here in June of this year, and then fresh 52-week highs. Now we have a pullback to around the green line. Notice that we're trying to kind of trade around it. It looks like it wants to go higher, but so far not terribly convincing. But it looks like I thought that this two candlestick combination was already it, but maybe not. So in any case, I think the euro is bullish, and by extension the dollar is bearish. And since vast majority of the US dollar index is euro, so we should pay attention to that. So yes, here's US dollar index. You can see it's dropping. We tried to rebound, made a lower low, and then rebounded to the same area, 94.1 or so. We could still continue higher. I think the bigger resistance is up here at around 95.5. Actually, let's look at what's going on there. So here's DXY. And here is that resistance line that I told 95.8 or so. So let me take a look at it. Yeah, that's a resistance line, and you can see it kind of nicely appeared on this chart with this overlays. So if I was trading US dollar, I would be shorting it, and I would be shorting it about now. Could I be wrong? Of course. Then if this another, if we get up to 95.80 and we don't hold here and we continue higher, then I'll be, maybe my premise is completely wrong, and maybe the dollar actually it turned around again. But for now, I would be shorting it still. US dollar versus Japanese yen. This is another reason why I think US dollar may continue to gain. You can see that versus Japanese yen, it's actually a pretty strong rebound here, and this chart is not entirely convincing. So we can do US dollar Japanese yen on this chart, and once again, it's difficult to say which way this will go. I mean, technically we have a bullish chart here because we have a breakout, and now we're just having a normal pullback with consolidation, sideways consolidation. But maybe also we turn around. So once again, this is an inconclusive chart in my opinion. British pound versus US dollar, I think is now bullish. British pound is bullish versus US dollar. Euro I just showed, but notice that the 50-day moving average is currently acting as resistance. for euro versus US dollar. And here's the weekly time frame for euro versus US dollar. Here's the reason why I think we're bullish. Breakout and a pullback to the breakout level. US dollar versus Canadian dollar. Very briefly, I think Canadian dollar is now bullish. I think we will find resistance here now around 1.2728 or so. Okay, let's continue to gold. Here's gold on a daily time frame. You can see choppy chart. In general, commodities are more difficult to trade than stocks, and in general, once again, I mean, this is kind of choppy chart. We have a breakout, throwback, we missed the throwback level and just continued lower. Got a hammer candlestick, a gap higher, and then we got stopped at the 50-day maybe. I don't know. It's gonna, you can see that there's a lot of choppiness going back and forth here. In general, I think the dominant feature of this chart is this, the 52-week highs. This is the important part of this chart. In fact, let me show it to you on the elite indicator. Let me see if I could, sometimes this gets stuck. Here is gold versus US dollar on a daily time frame. So breakout, throwback. You can see that this blue line right there is acting as support, although the green line would blew right through it. So again, these are not, you know, 100%, and really nothing is 100%. So it's just for your convenience and comfort. GLD here also looking like a breakout and throwback. I think this is a bullish chart. I would be going long, and actually we are trading it on the long side. Here's gold on a weekly time frame. I thought we were done. We had a gap. No, I guess we came back down, closed the gap at least. I guess we'll see where this goes. I mean, we could still break this 1262 and get to like 1204. That's also possible. I don't know if that would be a buying opportunity. It's possible. GDX on a daily time frame. This is looking like a bullish chart. Don't see too many divergences or big issues with the underlying strength. And here's GDX on the weekly time frame. So far, I still see the resistance reaffirmed at 2580 or so. Ideally, we should gap above that. And let me take a look at GDX on the elite chart. So 2470 would be the ideal. GDX, let me take a look. Looks a little bit different. Let's go to weekly charts on the elite indicator. So here's GDX on the weekly chart. Yeah, so ideally we should see a kind of close above 2470. That would be ideal, really. 2470, like on a weekly time frame. The data looks a little bit different, doesn't it? Yeah, it's adjusted versus unadjusted data. Yeah, so I think still it's a bullish chart. I would not short GDX or gold for that matter. Okay, let's move on to oil. Here's oil on the daily time frame. So a few weeks ago, I was so excited about this candle. I was like, oh my god, this is a rejection candle, and it was a failure at R2. Now I added this or not. I actually opened a short there around that area, and I was very hopeful about it, especially when I saw this big red candlestick, and I was very disappointed to see, because notice this is a big gap from here to here. That was a big gap. So I was like, no, this is not a behavior I want to see in a bearish security. So I actually closed my short. Yeah, this could be that oil maybe headed higher, and I could be wrong in my analysis. Yeah, maybe I'm wrong. Maybe this was the low for a while, and eventually will continue higher. It's difficult to say. Oil, the European benchmark Brent actually broke out recently. Let me show it to you on an elite indicator. It's a lot easier. UK oil. So you can see it was a breakout recently. So that is one of the reasons why I was so concerned about oil and I was reluctant to short it. I did short it. The transaction was a slight win, but for now I'm not 100% where this is going, so I'm staying out of this market, of the oil market. Natural gas. Interesting patterns here. This looks like a big hammer candlestick right there on Thursday. Big volume too. Actually, volume on a weekly time frame is really big too. So enormous volume. So this is very interesting because just recently I tweeted out this chart, and this is natural gas futures. Oh, I meant this chart. Let me take a look. These are natural gas futures, so I tweeted it out recently with a question mark, time to short natural gas. I wasn't sure. I'm thinking we're seeing a possible breakdown here in August of this year. And maybe now we're seeing rejection here at the resistance lines. But with this combination of candlesticks, now I'm not so sure. I mean, Thursday's candlestick is very strong, so it's possible we'll go higher. Difficult to say. I mean, you can also use the resistance lines and support lines as, you know, you can just buy and sell basically between the lines. And finally, copper. I wanted to show that we are trading copper also, so we actually have another position which is really doing well, and 52-week highs. We opened also relatively recently copper, and this is doing quite well. All right, that's it for this week's recap. Thanks for watching. Of course, hit the like button, and if you have any questions, send them in. Thanks a lot. Bye-bye. Okay, so very briefly, I am currently doing trade alert services, and you can sign for them here. So I have 3 levels of memberships: monthly, 6 months, 12 months. You get lots of information. I think the people are really, the subscribers are really happy about the training part. So there's lots of good training videos here, and just my thinking about how to approach the market, how to position yourself, how to calculate your position sizes so that you don't go broke. And there's lots of good information there. But the important thing is that currently I'm launching a new service level, so this could be considered like a basic service level. But I'm launching an elite service level, and there one of the primary things is that you get to use this elite indicator that I will share with you if you have a TradingView account, which is free, by the way. And with it you can trade, pretty much stocks, bonds, pretty much anything, so long as you follow my rules and instructions, and it's actually quite robust. For example, you can trade gold. Here's gold. You can buy or sell at the green, blue, light blue lines and yellow lines. And I explain all of this. It's actually extremely simple, and this is why I'm really liking this new elite interface. It really helps to cut down on the analysis and just concentrate on trading. So the subscribers are really liking it, and what the kicker is right now is that since I haven't actually launched yet, and right now it's October 2015, or rather October 15, 2017. So I haven't actually launched yet. So if you are interested, you can sign up right now and get the elite membership for free, so long as you are already a member at the time of elite go live. So this is a great deal, because um, here's a $24.95 deal, but you can get it for as little as $20.82 if you sign up for 12 months. What's nice is that once you're signed up for this monthly membership, currently in October of 2017, you will also get Elite for free. Later on, it will be around $40, so I would highly recommend you guys sign up. All right, that's it for this week's recap. If you have any questions, please feel free to contact me. Here is the help, and you can contact me there. And I am very quick to respond. So once again, thanks for watching, and have another great trading week. Bye-bye.